He predicted the AI boom and suddenly he lost 35 billion, the insane amount. And this story is about AI genius who lost 35 billion. And the big question is AI bubble cracking? And he was the one who predicted the AI boom and suddenly lost that insane amount of money. And let me break down the story. Imagine being one of the people who understood the AI revolution before almost everyone else. You worked at OpenAI, you predicted the artificial intelligence could reshape the global economy, you built the investment fund around that prediction, and your bet worked. Spectacular, right? Until suddenly tens of billions of dollars in value disappeared. That essentially what happened to Leopold Asselbenger and his AI-focused hedge fund situational awareness. And here is what makes the story more fascinating. His bigger mistake was believing that right about the future meant the market could not destroy him along the way. So let's get started. If you have followed AI for a while, you might have recognized Leopard Assenbenger. He worked previously at OpenAI's super alignment team and later became famous for his enormous situational awareness essay predicting extremely rapid progress towards advanced AI. And he did something more interesting. Instead of only talking about the AI boom, he bet billions on it. He created an investment firm focused heavily on companies powering AI or artificial intelligence, semiconductors, data centers, AI infrastructures, chips, the picks and shovels behind the AI revolution. And for a while, the strategy looked almost genius. Reuters reported despite the eventual crash, the fund was still up for 80% for 2026, but its earlier gains had been so extreme. But then July happened. The 45 billion AI machine. As an AI infrastructure, stocks exploded upward. Situational awareness grew with them. The Wall Street Journal reported Assenbenger had built what became a roughly 45 billion investing powerhouse, primarily focused around the AI trade. Think about the irony here. One of the world's most aggressive believers in AI wasn't just saying AI will change everything, he had effectively built an enormous financial machine around that belief. And when you are right, the leverage can make you look like a genius. But the leverage has the other aspect nobody wants to talk about it. If you borrow money to increase your market exposure, your gains get amplified. That's true. So does your losses. That's more important part. So a 10% move against you isn't necessarily a 10% problem anymore. And once lenders start demanding the additional collaterals, things can unravel incredibly quickly. Reuters says it is essentially what happened as the firm's position moved sharply against it and market liquidity deteriorated. The AI trade that turned. Now, this is where story gets much bigger than one hedge fund. A AI-related stocks company began selling off. Cheap stocks were hit particularly hard, and crowded traders that worked beautifully when everything was moving upward suddenly started moving the other way around. Situational awareness was caught in the middle. Reuters reported that funds portfolio value fell 67% during July of 2026. That's in 1 month. And when highly leveraged positions start falling that quickly, you won't get the luxury of saying, I will wait for stocks to recover. Your lenders want that money. Your risk limits kick in, margins calls arrive, and suddenly you are forced to sell assets when you least want to sell them. And Leopard Assenbenger later told investor that situation has moved closer to permanent capital empowerment and than the firm considered acceptable. The fund eventually removed all the leverage they had, and let's move on to the part three. And the Citadel showed up. Now here comes the movie-like part. As the fund scrambled to reduce the exposure, Ken Griffin's Citadel stepped in. No new name, he has been in the news. The Wall Street Journal reported that Leopard sold billions of dollars in holding to Citadel during the first sale. Reuters later reported that fund sold bulk of its stocks portfolio to Citadel and unwound most of its public equity positions. Think about it. One investor is forced to sell because the trade has become unbearable, and another investor arrives with enough liquidity to buy precisely when everyone else is panicking. Two different aspects of the coin, right? And one of the oldest lessons in the market, being right eventually is not enough. You have to survive long enough to be right. And let's move into the part 4 of the story. But here is the AI story everyone is missing out. And this is where I think the story becomes more important for everyone following artificial intelligence. Because the obvious conclusion would be AI stocks crashed, the AI bubble is over. But that's too simplistic. Arsene Wenger himself told investors the underlying fundamentals of the company remained strong even while the stock prices were collapsing. And those are two completely different things, to be honest. Technology can be transformational, while the investment in that technology is overpriced. The internet changed the world. That didn't stop internet companies from collapsing during dot-com crash era. Railroads transformed economies. That didn't mean every railroad stock was a good investment. And AI could follow the same pattern. AI may be genuinely become one of the most important technologies of this century, not only decades, while the investors simultaneously overestimate how quickly today's valuations can be justified. And those two ideas can exist, unfortunately or fortunately, at the same time. Let's talk about the irony, the part 5 of the story. And there is one more fascinating layer. If it's not at all a movie, think of this as a movie. Leopold Assenwenger became famous because he was willing to make extremely aggressive predictions about AI. He argued that technology could move faster than governments, institutions, and even technology companies were prepared for it. And his own fund ran into versions of exactly that problem, not because AI suddenly disappeared, but because the events moved faster than the financial structure around his bet could handle. That's the irony. He built his reputation on understanding the exponential technology change. But the financial risk can move exponentially too. One falling position becomes a margin call becomes a forced selling pushes the price lower. Lower prices creates more pressure, and suddenly that looked manageable becomes a critical crisis. Arsene Wenger himself compared some of those dynamics to a bank run where vulnerability creates even more vulnerability. And let me talk about my take, being in the industry for last 20 plus years. And this part I think matters the most. The story doesn't prove that AI boom is fake. It does expose something uncomfortable where we are right now. AI isn't just a technological revolution anymore. It is becoming one of the most crowded financial trades on the earth. Billions are flowing into chips, data centers, power infrastructure, model companies, cloud providers, and AI startups. And everybody wants an exposure to the same future. But when enormous amount of money starts chasing the same narrative, the difference between technological reality and financial expectations becomes incredibly important. You cannot completely correct that AI changes the world and still extraordinary amount of money betting on when and how that transformation happens. Perhaps the real question, the lesson from this $35 billion meltdown, the person who predicts the future isn't necessarily the person who survives the journey there. AI could become dramatically more powerful over the next few years. Nvidia could continue selling enormous amount of infrastructure. OpenAI, Anthropic, Google, and Meta keep pushing forward the frontier models. Yet financial markets surrounding AI could experience violent corrections along the way. So the question isn't simply, is AI a bubble? The better question is, how much of the futures have investors already priced in? Because of one of the famous AI believers can get caught on the wrong side of AI trade, this story may be less about one hedge fund and more about how dangerous the next phase of AI boom could become. If you follow bigger stories shaping artificial intelligence, subscribe to this channel because the AI race is moving fast and sometimes the money moves even faster. And thank you for watching. Thanks for tuning. Hey, if you have not met me, my name is Pritam. I happen to be a TEDx speaker and an AI author, and I've been working with Google for last 7 years. Stay tuned for more such updates and see you in the next one.